CPI inflation, that's headline inflation, is 3%. That's 2.5% real rates. And if you look back, you'll see that that real rate, 2.5%, was the peak right before 0809. So that's somewhat concerning.
Today we have the latest interview with the CEO of ARK Invest, Cathie Wood, giving us a market update for 2023. According to recent reports, Federal Reserve policymakers are preparing to raise interest rates this month and are open to the possibility of further increases later in the year. Officials are cautious about declaring an end to their efforts to combat persistent inflation. The central bank aims to avoid repeating the mistake made in the 1970s, when premature easing of inflation control led to a resurgence of double-digit price increases. Federal Reserve Bank of San Francisco emphasized that it is too early to claim victory over inflation. However, investors have begun speculating that the expected quarter percentage point rate hike at the upcoming Fed meeting will mark the end of the current credit tightening cycle. These expectations have driven stock and bond prices higher, indicating market confidence in the Fed's intentions. Let's check out the latest interview with Cathie Wood, as she talks about her outlook for 2023 and what economic indicators we can expect with inflation, the stock market, and the potential impact of cryptocurrencies on the global monetary system. Don't forget to share your thoughts and comments down below, and leave a like if you enjoy the content we do here.
We got a downgrade. Fitch downgraded government debt this week. And some economists are treating that with alarm, and others, including strategists, are treating it with a yawn. And the truth is probably somewhere in between, as is usually the case. It really is a sign that our spending, the government spending, in the last 5-6 years has just been out of control. And my reaction to it is, hopefully this is a warning to the legislature and politicians generally that the spigot is going to have to stop. And it's interesting, as I look in the GDP accounts at the government line, it's actually shrunk as a share of GDP, and most of the spending is not in the GDP report. GDP is production of goods and services in the US economy. And a lot of the spending has moved off into social programs, which are not part of GDP, like, say, defense would be. So I think that topic is going to gain a lot of currency. Maybe they'll skip through it over the election year and campaign season, as they usually do. But I do think Fitch is warning us that we're going to have to deal with this issue in one way or another. Our point of view would be enact policies that encourage very rapid growth, because we're on the threshold of some technologies, as you know, we talk about them all the time, really turbocharging growth. And the best way to get out of a debt problem is to grow out of it. The other thing that happened that was kind of interesting from a fiscal policy point of view, especially now that we've entered the election campaign season, was movement on crypto legislation in the House. Now, we don't think it will get out of the House because Maxine Waters is head of the Financial Services Committee and is not pro-crypto. But crypto, or as Art Laffer would say, could you please use a different word, like digital assets legislation? We do think that it will become an election year issue. And the fact that it's even stirring in the House at this point in time and becoming a conversation, we think is going to work to the benefit of crypto. And what's very interesting is, whereas we thought we had a bipartisan issue in crypto, the sides seemed to part, especially with Elizabeth Warren siding with the banks, interestingly and unbelievably, that we need to be very careful in this realm. We should not trust it. So we thought there was a partisan divide evolving, but we are seeing some Democrats coming back to these bills. There were two that were voted. Well, one has been voted on already, and it got 6 votes from the Democrats. That one was on market structure. The next one is on stablecoins, and apparently that will have many more than just 6 votes from the Democrats. So this could become, yet again, a bipartisan issue, which we think it should be. Innovation solves problems, and this crypto legislation would really put in place the layer of the internet that no one contemplated in the early days of the internet, because it simply was a place to exchange information. Nobody thought about commerce or financial services about this period of time. And while I have always thought it was characterized by booms and busts, and it was, what Art says is those booms and busts happened very quickly, 6-week periods of time before they'd clear up. The booms and busts that have evolved since the Fed took control have been many years in the making, and then when they happen, they are extremely destructive. So just putting in a plug for that. Anyway, on monetary policy this time around, Chairman Powell, in his testimony to Congress, basically used the word restrictive to describe monetary policy, which is a big step, I thought at least. And he wasn't thinking about it in terms of the money supply. And as you know, we've been talking about the money supply falling on a year-over-year basis. And in fact, if you go back into 2021, you'll see that the money supply really hasn't gone anywhere in 2 years. This is extremely unusual and negative year over year, as I've said on all of these calls, since M2 growth turned negative early this year. That we have not seen since the 1930s. And we've also seen a collapse in banks' willingness to lend. They're very worried about the health of the economy, and they're facing even more capital restraints, we've learned in recent days. So monetary policy is restrictive, but Chairman Powell was referring to real rates when he said that. So the Fed funds rate is at roughly 5.5% now. And CPI inflation, that's headline inflation, is 3%. That's 2.5% real rates. And if you look back, you'll see that that real rate, 2.5%, was the peak right before 0809. So that's somewhat concerning. But more concerning to me is that the inflation rate is coming down so rapidly now that what if we're at 5.5% on the Fed funds rate and 0 on inflation by the end of this year? We believe is a real possibility. That would be a 5.5% real rate. And we haven't seen those since the 80s, when the Fed was all about fighting the return of double-digit inflation. That's not where we are right now.
Cathie Wood notes the movement in crypto legislation in the House, signaling the growing interest in the crypto space. Although crypto legislation might face challenges due to opposition from certain figures, she believes that the conversation alone will benefit the crypto market, leading to potential growth opportunities. She also touches on the current monetary policy, where Chairman Powell refers to it as restrictive, raising concerns about inflation rates. The potential rise in real interest rates could impact investment decisions, making investing in alternative assets like Bitcoin and other cryptocurrencies more attractive due to their inflation-resistant properties. What do you think about the latest interview with Cathie Wood and her insights on government debt, rapid economic growth, and the ever-evolving landscape of cryptocurrency? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.